Silver is crashing right now, and that doesn't make any sense. In times like this, silver is supposed to go up, but with geopolitical tensions, rising inflation risk, and uncertainty everywhere, and yet silver is falling hard. So what's actually going on? Hi, my name is Mike. I've been investing in risk on markets now for the last 10 years. I'm not a financial advisor, and I'm not giving you personalized financial advice. We're just here talking about markets and investing in the opportunity. So let's start with what has actually happened. Silver's been dropping now for multiple days straight. In fact, it's the longest streak that silver has had in years. It isn't just silver though, gold has been falling too, but silver is getting hit harder, which tells you something important. This isn't normal. It's not safe haven mode anymore. Gold and silver prices are about 1 month low and both metals face losses. Wednesday, we saw bucking traditional wisdom that precious metal prices spike in times of global conflict as Iran war has pushed oil prices high and strengthened the dollar, putting downward pressure on the market. So what's really going on? Well, here's the real driver. Interest rates. When rates stay high, assets that don't produce yields become less attractive, and that includes things like gold and silver. At the same time, the dollar strengthening, and we can see this on the DXY index, the dollar cost average. This makes silver more expensive. It makes it more expensive globally, so even though macro environments look bullish, monetary conditions are actually very bearish. Now, this is where it starts to get interesting. Silver didn't just rise because of fundamentals, it rose because of speculation. Momentum traders, retail flows, fast money chasing the move. And that kind of capital leaves fast. So when you're seeing right now, it's not just selling, it's actually a massive positional unwinding. Such things as leveraged silver ETFs are contributing to this turmoil because their amplification mechanic, essentially to maintain daily leverage, these funds rebalance each day. When prices rise, they buy the underlying asset, often via silver futures, to restore target leverage, and when prices fall, they sell the underlying asset as well. The predictable momentum-like trading creates feedback loops that reinforce prevailing trends and can distort price. But here's where the part most people are missing. Oil prices are rising. Because of geopolitical tensions and the war in Iran, these are pushing inflation expectations higher, which means capital banks can't cut rates, liquidity stays tight, and well, pressures stay on markets, and that feeds directly into metals. Today, the dot plot from the Federal Reserve members outlined their projections going forward for 2026, 2027, and 2028, giving us a clue as exactly what's coming. So for 2026, the expected end-of-year rate is at 3.4%. This is actually unchanged from December's estimate. The end of 2027, the rate is also unchanged at 3.1%. The skew of the projections is more confined to between 2.5 and 2.7, as low as 3.5 to 3.7, remaining very, very tight. And actually, we're seeing more members' view on this. In fact, we got one dissenter with the rest of the Federal Reserve members saying that they are comfortable where the projection of monetary policy sits. But here's the key difference. Gold, silver, they're safe havens, but silver is actually industrial. It's speculative. It's momentum driven. So when markets get unstable, silver doesn't always behave like gold. It behaves like a risk asset, which is why we are seeing the price push down. If you want to understand how macros are working, then silver is a great example of this, and more importantly, what pushes the market. As liquidity becomes tighter, Federal Reserves as well as banks don't get the ability to change. This means that things like precious metals and risk on assets become way more challenging to trade, and therefore prices tend to push even further down. So what can we expect, and what are the things we need to look at? Well, we have the Bank of Japan giving their interest rates very, very soon, and this could give us another indication as what global markets want to do. This would affect the price of metals, gold, silver, and much more. But silver is a good indicator. Is institutional money coming? Are retail flows simply out? And now are we going to see a settle in the market? Silver, gold, they're the ones to keep your eyes peeled on. And as the macroeconomics change, these are going to give us early indications as to where prices and, more importantly, global markets could go next. If you want to understand how all of this works, make sure you hit the subscribe button, because this isn't silver. This, well, is the fundamental global system. See you in the next one. Take care.